1. Start with energy, explain with authority, highlight with emphasis, and with warmth. 2.80 USD, down 0.25 or roughly 8.20% on the session as we watch the tape on this Monday, December 1st. If you're looking at that 8% red candle and feeling a knot in your stomach, you are not alone. Rezolve AI has been a battleground stock all year, and today's price action feels like a punch in the gut to anyone who bought the breakout last month. The expectation on the street this morning was supposed to be celebratory. The company just dropped a massive press release announcing the acquisition of Crownpeak for $90 million. In a normal market, when a small-cap tech company announces it is acquiring a revenue-generating asset that instantly boosts its top line by $70 million, the stock rips higher. That is the expectation. You buy growth, the market rewards you. But the reality we are seeing at $2.80 is a brutal vote of skepticism. The market is looking at this deal and asking, with what money? Investors are staring at the balance sheet, seeing the cash burn, and interpreting this acquisition not as a growth lever, but as a desperate attempt to buy revenue to mask slowing organic growth. They see dilution. They see integration risk. They see a company biting off more than it can chew. However, if you dismiss this drop as just another failed SPAC drifting to zero, you might be missing the most critical strategic pivot in the company's short history. This isn't just a random acquisition, it is a distribution play. What we are witnessing today is the friction of a company trying to mature overnight. By acquiring Crownpeak, Rezolve isn't just buying revenue, they are buying the rails. They have the engine, the brain commerce AI, but they lack the tracks to run it on. Crownpeak gives them 400-plus enterprise customers immediately. The drop to $2.80 is the short-term arbitrage players punishing the balance sheet risk, while the long-term bulls are trying to calculate the upsell potential of putting brain into Crownpeak's legacy clients. Let's pause on the price action. The volume today is aggressive. We have already surpassed the average daily volume, and it is only lunchtime. This tells us that the shareholder base is rotating. The retail traders who are hoping for a quick pop on the news are bailing out, frustrated that the good news resulted in a red day. Meanwhile, we are seeing some large block prints hitting the tape at $2.75, which suggests that institutional accumulators are stepping in to defend the lows. Before we go further, I want to hear from you. Comment below if you think this Crownpeak deal is a stroke of genius or a Hail Mary to save the stock price. And be honest, are you holding RZLV shares right now, or are you waiting for the dust to settle? To understand why this stock is so polarizing, you have to understand the core product, Agentic Commerce. The general belief is that Rezolve is just another chatbot company. You see AI in the name, you think ChatGPT wrapper. That is the lazy analysis. The reality is that their brain suite is designed to solve the abandoned cart problem, which is the trillion-dollar leak in the e-commerce bucket. Most people browse on mobile, get frustrated with the checkout, and leave. Rezolve's technology allows for instant checkout from anywhere, a poster, a video, a social post, using image recognition and generative AI. They are trying to make the entire physical world shoppable. But here is the shadow hanging over the stock today, the fuzzy panda report from back in September. Even though months have passed, the market has muscle memory. That short report alleged that Rezolve overstated its AI capabilities and revenue pipeline. Management categorically denied it, but once that seed of doubt is planted, it takes quarters of clean execution to remove it. Today's drop is partially fueled by that lingering fear. When investors see a complex acquisition like Crownpeak, the bear case whisper gets louder. Are they buying Crownpeak to hide the organic numbers that the short seller warned us about? That is the fear gauge acting on the price. Now, let's look at the partnerships, because this is where the Tesla stock or Nvidia stock comparisons usually come in from the hyperbulls. Rezolve has inked deals with Microsoft and Google. These aren't just we use their cloud partnerships. These are co-sell agreements. Microsoft is incentivized to sell Rezolve's Brain Suite through the Azure Marketplace. The expectation was that these partnerships would lead to an immediate explosion in revenue in 2025. The reality has been slower. Enterprise sales cycles are long. A CTO at a major retailer doesn't just rip out their entire commerce stack because Microsoft suggests a new AI tool. It takes time. The market is impatient. It wants the revenue now. And when it didn't show up in Q3, the stock drifted. If you are trading this on a Fidelity trading platform or swiping through your Robinhood app, you need to be aware of the lockup dynamics. As a company that came public via a SPAC, there are waves of shares that unlock for trading at specific dates. We are navigating through one of those periods now. Early investors and insiders often sell into liquidity events, like an acquisition news day, to de-risk their portfolios. This creates a natural ceiling on the stock price, no matter how good the news is. Let's talk about the Crownpeak deal specifics. Rezolve is paying $90 million. Crownpeak is a digital experience platform, DXP. Think of them as the plumbing for corporate websites. It is not sexy. It is not high-flying AI, but it is sticky. Companies hate changing their DXP. By buying Crownpeak, Rezolve effectively installs itself into the IT stack of major global brands. The bull case is that they can now toggle a switch and offer brain commerce to these clients without a 6-month sales cycle. If they convert even 20% of Crownpeak's clients to the AI product, the acquisition pays for itself in a year. That is the math the longs are doing at $2.80. The online investing community is currently divided on this name. On SoFi Invest forums, you see the younger demographic fascinated by the shoppable image technology, the idea that you can take a picture of a pair of sneakers on the street and buy them instantly. It feels like the future. On Interactive Brokers stock trading chats, the older, more cynical crowd is focused on the cash burn. They point out that Rezolve had limited cash on hand prior to this deal and is taking on debt to close it. In a high-interest rate environment, debt is dangerous. If the execution falters, that debt becomes an anchor that drags the equity to zero. Let's analyze the technicals. $2.80 is a precarious spot. We are flirting with the all-time lows. The next major support is around $2.50. If $2.50 breaks, there is no technical floor until the stock becomes a penny stock. However, the RSI Relative Strength Index is dipping into oversold territory. Every time this stock has hit an RSI of 30 this year, it has bounced violently. We are approaching that zone. The MACD, Moving Average Convergence Divergence, is showing a bearish crossover, which confirms the momentum is down, but the histogram is starting to flatten, hinting that the selling pressure is absorbing. We also need to consider the macro wins. We are in December 2025. The AI trade has matured. Investors are no longer throwing money at anything with .ai in the URL. They demand profitability, or at least a clear path to it. Rezolve is promising EBITDA positive results in the near future, but promises in the SPAC world are often broken. This is the trust gap. The price of $2.80 reflects a show-me discount. The market is saying, we don't believe your projections until we see the cash in the bank. However, consider the Microsoft angle again. Microsoft does not typically put its name behind vaporware. The fact that Satya Nadella met with Rezolve CEO in London recently suggests there is real technology here. Microsoft needs wins in the commerce space to compete with Amazon. Rezolve is their proxy war. If Microsoft decides to lean in harder, perhaps with a strategic investment or a massive joint customer win, this stock won't be at $2.80. It will be at $5 before you can open your Fidelity mobile app. That is the asymmetric upside. You risk the stock going to $1.50 against the potential of it going to $6 or $7. Let's discuss the Brain product in more detail. It relies on a proprietary large language model called BrainPower. The claim is that it is immune to hallucinations. It won't make up products that don't exist, which is a huge problem for standard LLMs like GPT-4 when used in retail. If this claim holds up at scale with the new Crownpeak clients, Rezolve has a moat. Retailers are terrified of AI lying to their customers. A safe AI for commerce is a valuable commodity. If you are using Fidelity Wealth Management or looking for safe investment help, an advisor will tell you to run from this stock. It fits the profile of high-risk speculative growth. It is volatile, it is losing money, and it has a complicated capital structure. But if you are a self-investing trader looking for alpha, these are the setups you hunt for. You look for the moment where the sentiment is so bad, $2.80 down 8%, that it ignores the fundamental change in the business, the acquisition. The future outlook for Rezolve AI